While the global media focuses on the geopolitical chaos unfolding in the Middle East, a quiet, unprecedented wealth transfer is happening behind closed doors. Welcome to the economics of the security supercycle. When major military powers clash, it triggers a multi-trillion-dollar ripple effect across global markets. The truth is, modern warfare destroys local economies, but it mints absolute billionaires in the global financial sector. So, if we follow the money trail of the escalating US, Israel, and Iran conflict, who are the actual financial winners? Let's break it down. The most obvious beneficiaries are the titans of the aerospace and defense industry. Every time an Iron Dome interceptor is fired, it costs roughly $50,000. The Patriot missile batteries cost up to $4 million per shot. When hundreds of these are used in a single night, the stockpiles are instantly depleted, creating an immediate, inelastic demand. Governments are forced to sign massive, multi-year emergency contracts to restock their arsenals. As a result, megacorporations like Lockheed Martin, RTX, and Northrop Grumman see their valuations skyrocket as their order backlogs stretch into the next decade. But the defense sector is just the tip of the iceberg. The second group of massive winners are the titans of the global energy market. Iran borders the Strait of Hormuz, a narrow maritime choke point where 20% of the world's daily oil consumption passes through. Any threat of a blockade or disruption in this region instantly sends crude oil futures spiking. Who wins here? Not the consumer at the gas pump. The winners are alternative energy suppliers and US shale oil producers. When Middle Eastern oil becomes too risky, global buyers pivot to American and European energy companies, resulting in record-breaking quarterly profits. The third and perhaps most unexpected winners of this conflict are the global shipping and logistics billionaires. Because of the kinetic activity in the Red Sea and surrounding areas, major commercial freight companies refuse to take the shortcut through the Suez Canal. Instead, they are forced to reroute their massive cargo ships all the way around the continent of Africa. They use the crisis to justify astronomical increases in freight rates. The cost to ship a standard container can triple or quadruple overnight. This supply chain bottleneck acts as a massive tax on global consumers, funneling that excess capital directly into the pockets of maritime shipping monopolies. But there is a new, hidden sector profiting from this conflict: the cyber mercenaries. Modern warfare is no longer just kinetic, it is highly digital. State-sponsored hackers are constantly probing critical infrastructure. To defend their power grids, banks, and communications, governments are pouring billions into private cybersecurity and AI defense firms. Companies like Palantir and CrowdStrike secure highly classified, incredibly lucrative government contracts to build invisible defense shields. Finally, we have to look at the macroeconomic hedge: institutional capital preservation. When war breaks out, the stock market usually experiences a sharp, panic-driven sell-off. But smart money doesn't just disappear, it rotates. Trillions of dollars instantly flow out of risky tech stocks and into safe haven assets. Gold hits record all-time highs. The US dollar strengthens. And increasingly, institutional investors use Bitcoin as a digital hedge against geopolitical collapse. The wealthy use these chaotic events to buy the dip, scooping up undervalued real estate and equities while the general public panics. This is the harsh reality of global economics. A crisis on one side of the world is a generational buying opportunity on the other. The security supercycle ensures that while governments take on massive debt to fund the conflict, the private sector absorbs that capital as pure profit. From defense contractors and oil tycoons to cybersecurity firms and shipping magnates, the war economy is a highly optimized machine. It is a machine designed to transfer wealth from the public taxpayer to the private corporate ledger. Understanding these macroeconomic shifts is the only way to protect your capital and navigate the future of global wealth. If you want to understand the hidden megaprojects, technology, and economics shaping our world, you are in the right place. Subscribe to Zyllo Scroll to stay ahead of the curve. The future is already here.